Manufacturing slowing down in Europe. The PCE report's coming out this Friday, and a gross domestic product report is coming out Thursday. What does this mean for your investments? We'll answer these questions and many more on today's Market Minute. Today, October 24th, 2022, all three indices are up in the stock market based upon actually bad news. In the mortgage industry specifically, bad news in the economy is good news for interest rates as the anticipation for lower rates starts to rise. And so that's what we're seeing this morning. Inflation is certainly kicked in all the markets across the globe. However, as interest rates are hiked by all the central banks, we're seeing the recession kind of come into play here. Manufacturing slowing down. Reuters reported this morning that it was down significantly in Europe. That lowered yields there, and that came overseas here, and it impacted our market as soon as the market opened this morning. So all three indices are up in your stock market, and yields are down. We're down below that 4.25 on the 10-year Treasury, which is a key indicator. We want to keep that ceiling of resistance, and hopefully it can be turned back like we saw it turn back on the 4% rate. Every quarter, we see that as a potential ceiling, and if we break through it, it's a floor of resistance. So hoping to reverse trend here. The Wall Street Journal reports last Friday, that the discussions between themselves are pretty heated as far as how to slow down the rate hikes because they are imminent. They need to do that as the recession starts to creep in. Today is Monday. This week, Thursday, we have the GDP report, which is going to be a great indicator in the direction that the Fed is going to take as far as are we still contracting. First and second quarters were retracting as far as economic growth. PCE, the personal consumption expenditures report, will be released at 8:30 on Friday. Some big reports coming out this week. So right now we're recommending, lock where you can. If you're in the mortgage business, if you're a realtor, lock where you can because we're seeing a lot of volatility. There are good times to lock. However, long term, anything over 30 days, we're recommending our clients float those loans and wait for rates to drop a little bit. If you found this information useful, drop a like below and be sure to subscribe to our channel. And for our most recent market minutes, you can go here and you'll find our lessons in lending series right here. What we talk about the most common questions we're asked as far as the mortgage industry, how to anticipate what is expected of you when applying for a mortgage. And I think you'll find it very helpful. Again, my name is Brent Starts with United Lending, and this has been your Market Minute.